Welcome back, Market Mastery Spring Break Edition. I'm with the children in Florida, so excuse the attire. Shy is obviously considering lumberjacking for a living, so that's why he's dressed appropriately. We're all changing today. We're going to have a jam-packed show for you. We're going to have to keep it nice and tight, 30 minutes or less. Get this all packed in. You are going to get your SPY options trades for the week, both bull and bear. You're going to get a breakdown of Tesla, NVIDIA, Palantir, and more. We're going to talk about whether or not this is market recovery or is this a fake out. And then we will dive into some wonderful new tools that can really help you understand the momentum, fundamentals, and story of a company, and accompany that with a quick game of smash or pass. So get those tickers ready. Feel free to throw them in the chat now. We're going to go back and pull from them. Again, we are on a timeline today. Today's going to be the most jam-packed 30 minutes you ever had, but it's going to give you everything you need to make the most of this market and get into it. So let's get started. Let's get into the SPY today. One hell of a recovery. I would really hope that someone, when we were testing 560, was talking about taking 574 calls. Good thing they were. That person was me. So little shameless plug there. If you're not getting these SPY Mastery options trades, you need to get in. Join the Penny Boys Discord and ask about it. We will give you the info and get you signed up, send them right to your email. That is the ticket. 2 options trades to get you set up. So again, we broke out. We hit 558 off the lows of 548. Little $10 move up, came back down. And now we are retesting these gaps we have here as high as 585. This could move quick if we continue to see the momentum we've been seeing. So let's get on into the 15-minute chart. We're going to break this down for you guys. Remember, we are going to give you the bull and bear trade. Bull and bear trade. Okay, Trader's Mindset says 30 minutes to make the most of this market. That's a laugh. People spend $10,000, blah, 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 blah. Brother, let me tell you something. Just between me and this guy, we have spent easily 30,000 hours. We're just giving you a 30-minute breakdown of what those years of research have come uncovered. But, hey, I get it, man. I get it. Tough stuff. Thanks for the input. All right, let's keep it moving. Whew, 15 seconds, wrong chart. Whoops-a-daisies, 15-minute. Okay, so here we are looking at the SPY. Beautiful recovery, strong move up today, and end of market on Monday. Excuse me, that's today. Yep. End of market Friday was where we started to see the strength. If you guys are in the Discord, you recall we flipped. We were bearish, thinking we were going to get stopped out here at 563. The market turned up. We actually took the 574 calls lotto pick for today. Those are in the money. Congratulations to all the traders that took those with me from the Friday stream. Let's take a look at where we're going to go. We talked about 585 being that magnet. Shy, let me ask you something today. Did you expect to see such a strong move up from 566?
No, I mean, listen, after weeks of turbulence, I did not expect this kind of tentative recovery. They were indices, SPY and QQQ, like they both clawed their way above their 200-day EMA and SMA with conviction, which was nice to see. So I think technically speaking, the worst might be behind us in the near term, and that's nice to see because a lot of times when we enter a stage 4 breakdown on a chart, that's when people lose money. That's when a lot of folks lose the money they made in stage 2, which was the breakout phase. Now being above their 200-day EMA and estimate, that is a green light for a lot of traders as well as a lot of investors to re-participate in the market because we're recovering the trend upward again. We're not gonna have a lower low potentially, but I also think this was due to Trump's tweet over the weekend. So you just never know when the next tweet's going to be and what's going to happen from there. Like I great green day today. We recovered a key levels. I still have anxiety about like what's going to happen in near to medium term, and be cautious. Yeah,
and we should. And so, correction: the calls we took on Friday were the 569 call, and those are up 379%. So, cheers if you took those with us from the Discord. All right, let's get into it. So we are looking at the chart here again. We talked about 585 being this upper level. Let's take a little bit of a closer look to understand where the price might get stopped up based on past price action. Sellers seem to have some control here at 579, so I'd say that's probably our most appropriate target. $5 move up. I'll take that as far as risk on reward versus aiming for 585 any day of the week. But now we know This would be our bullish target 1, and this would be our continuation target. So if it crosses above 579, 580 with strength, we know that if we have a great opportunity to continue to hold up until at least 584, 585, which pushes those contracts even deeper in the money. So for our bullish trade, I think we're going to start with that first target, and that would be what is right there, 579. I chose April 7th as the strike. I think we're going to go for the 580 calls. So that would be the SPY 580 call dated 4/7. Those are currently priced at about $486 a piece. Applied volatility is up a little more than I would like, but here we are. This should be a great trade that should continue to pay if we break up and hit 574 or 579. And if we continue to 585, this trade should pay even more. So now let's talk about the downside. Shay, you just mentioned the risks, right? And I'm with you that I think right now we can be optimistic, but that doesn't mean we're not in a like a, you know, like do you remember a couple, like I guess even a year and a half ago, the go long opportunity. You know what I mean? Like it was clear, like this is the go long, right? Or the Chinese arbitrage deal, right? You called that out live. I mean, we were there. You were calling that out like, no, buy. Are you feeling like this is one of those opportunities, or do you think this is still play cautious, take some opportunities that are on the table that are low risk, high reward, and leave the rest? What are your thoughts here with what you're seeing right now?
I don't know. I think the foundation of that optimism you just called out is anything but stable. Let's just say that. I think there's going to be more volatility. So if the VIX breaks below 15, I will be buying probably some hedges to capitalize on buying when it's cheap, just like I did the first go around, and it did work really well. I think the consumer side of the economy is still weak beneath the surface. Confidence surveys remain soft. You just heard the commentary from a lot of the airlines, their pre-announcements, and the whole industry is reinforcing the idea that discretionary spend is under pressure. Retail sales are showing a lot of mixed results, and I do think that interest rates are the 10-year still at 4.3%. So like this rally we've been experiencing, I do think it's more mechanical and driven less by the fundamentals and more of structural flows. Like we're also the last week of the quarter. Everyone needs to factor in pension rebalancing, the risk appetite towards like the end of during OPEX periods, like the end of like the first quarter. Like there's a lot of wonkiness that occurs. And we were oversold last week. We were. The daily RSI on the Qs and SPY were below 30. When it's below 30, typically that means it is oversold. And we've got a bounce. And we had a substantial follow through today above those 200-day moving averages, but it doesn't take the fact away. We are still in a high stakes poker game. Consumers and enterprises are adjusting accordingly, front running potential further tariffs, potential higher for longer interest rate environment. And that is going to affect the business spending. It's going to affect the earnings this upcoming cycle. That will not be going away.
I want to thank Traders Mindset for the contribution here. I'll leave this up to give you a shout out, give you a little promo. Shay, just there you go. Now you're back. El Gato took you away, but you've returned.
Yeah, I mean, guys, take the W for what it is. This was a W because we did technically recover. It's just like I'm not using all my cash. I'm not. Like I think this is purely. I'm not confident yet in the near term. So I have an 8% cash position. Probably won't be participating in any ads. Like even this recent pullback, like none of the high conviction names I wanted to add to weren't screaming buy to me. They weren't.
Right.
Like it was like in this weird gray area. Yeah.
But there was no confidence there. Even Palantir, everyone was asking, you know, I mean, hey, just so you guys know, we've highlighted those levels. We gave you the perfect level on Palantir and Robinhood. You could have scooped the bottom on ads. But again, to reiterate what he said, I know I didn't buy any. And I know that if I'm in the middle of something and I'm busy, the right trades you always make time for. And I think that kind of calls for this to be brought up. If you don't see us pounding the table being like, I'm buying this, that goes to show that there's enough indecision between the two of us that I'd bet my entire life savings on that intuition above anything else, above any analyst, above any bank. I either have delusional confidence in us or we are dialed in. It's one of the two. I guess we'll see. So who's to say? Now let's get into these bear levels. The bear scenario I think is pretty straightforward. I'm going to keep it quick. I think we get if we trade bearish, I think it will be because we have rejected 575, get washed out right here. You see all this sell side pressure. See where it wicks down. Buyers come in, and then we get rejected right here. Sellers will try to continue to move the line down so that they get more strength. I think they're going to do the same thing here and try to wash it out just like they did right there. So I think if anything, we could get rejected around 575 and come back down to test 566. So I'm going to be looking at the April 7th 566 puts, which are priced at about $4.18 or $418 per contract. Applied volatility slightly stronger to the downside, but I think that is a very quality contract to look for a rejection right here, meaning the 15-minute crosses up and then gets pushed back down, and then a new candle opens below that level. That would be my confirmation to enter the trade, and I will ride it out until we fill this gap down to 566. Both of these trades, I would say, are low risk, extremely high reward that are catered to a quick entry and a quick exit. If it's not working out, kill it quick. Wait for your confirmations. If you don't know how to trade these, hit the link at the bottom, join the Discord. We can walk you through exactly the strategy step by step, and you get the charts. If you're not following us on TradingView, make sure you are. We're going to publish this chart for you that has all of your SPY options trades and the levels that we indicate. It's just at pennyboys with an I, one word. Check that out. So we talked our SPY. There you go. Now you have it. Let's get into some of the names that are a little more fun. We got NVIDIA pushing back up, testing the 120s. I didn't like that they really got shoved down. Like, to me personally, you really wanted to see this momentum carry into the close and into after hours. I mean, what are your thoughts seeing chips rebound like this?
I mean, I think GTC last week happened when the market was correcting itself. So I don't think it got the stage it really deserved because there's so much macro noise affecting the markets that people view GTC as like a good event, not a great event, because of the price action was meh afterwards. When really the price action was meh because of the macro environment. It wasn't anything about GTC. What I got from GTC is that AI is just getting started and the boom has a lot of runway to go. GTC NVIDIA laid out a roadmap on how they're going to not just keep up with AI, but essentially define the infrastructure for this whole theme across the next decade. Like, AI is clearly moving away from the simple model retrieval to the full agentic reasoning. Agentic, guys. Agentic AI is something I've been talking about for a while. That is going to be explosive, and it's going to affect so many industries structurally, and a lot of software names and consumption models will benefit substantially from it. That was a big takeaway from my guy from GTC was agentic reasoning is going to be the next shift to reiterate the re-architecture of computing in itself. I do believe that if you viewed NVIDIA with hardware goggles on, you left GTC with knowing that they're controlling a full stack of AI now. Like, AI workloads are fundamentally going to look different. Like, traditional computing was essentially built on retrieving data, running a set of pre-programmed instructions, and delivering an output. AI-driven computing, especially with the LLMs like the ChatGPTs, Geminis, etc., is now about generating information on the fly, real-time data, whether it's writing code, designing molecules, or something with the supply chain in real time. Like, you need exponentially more than just computing itself. It's not just for training, it's at inference for scale. Inference, guys. Training data will be cheaper, but the demand for inference will skyrocket, become a much greater tailwind than the headwind of AI trained data becoming cheaper. So I think my takeaway from leaving NVIDIA's, I didn't go there, but my takeaway from the GTC 2025 event was NVIDIA's not a hardware company. I've been saying it for months, over a year actually. They aren't just selling chips. They are selling the entire AI production stack now.
Yeah, they're basically AI/cloud infrastructure now. It's
totally
insanity. Like, it's genius. And to give you guys a little bit of an instance that you might make a little more sense is it's the hub of the wheel with all the spokes, right? You look at what marketing did and then the 60s, 70s, and 80s as we started to capture information when they started logging addresses and mailers became a thing. People built empires on the back of being able to use, leverage, and derive benefit from that data. That's what he's talking about with as far as the training data available and applicable. But the question is how do you really use it? Like, how do you gain that discretionary understanding of what this needs to be used for and how, and then make it to that you can just click a button to process information and get it quickly. For those of you guys that are in the Discord, you've seen some of the bots that I've been building. Like we built our stock market blueprint bot that basically can analyze your psychology based on a series of questions and help determine a course of action to make you a better trader. That inference is the value. The data is general, but the specific prompt and coding that we put into it and the directives we gave it as to how to use the information are what bring the value to the equation. So those that understand how to, prompt and define, I think it's going to be big. And so off the back of NVIDIA, we'll take a 2-second aside to talk AMD because it was brought up in the chat. This is one chart that does look like it has not yet had its day in the way that it should. What are your thoughts on AMD from a competitive landscape point, but also just as far as getting exposure to other names in the similar space? Not the same, but similar.
All right, let me see. Let me go on Value Sense real quick right now to see what AMD is showing me right now.
Because I'm
Before I
loving
get into the
like $100.
I mean, dude,
I'm loving that
breaking
area.
It's breaking out right now. It's like you can't deny it. It's so was it up 7% today? Yeah, I mean, look, the quality scores is 7. That's great to see. Momentum still needs to pick back up. So that's my issue. Like it's recovering, but look, it is severely underperforming S&P. Let's see the past 3 years.
Yep.
Yeah. Oh my God. See the past 3 years. This is stage 1 of AI essentially. Like this is when the golden era of hardware for AI is supposed to experience for a lot of these names. AMD is known as everyone keeps saying they're an ecosystem essentially, but they're not. Like the reason NVIDIA people aren't leaving NVIDIA's pricey ecosystem is because of CUDA, their software platform that cements themselves into permanence with AI within AI because of the developers. Like there's no alternative solution to CUDA. Like I know AMD has an alternative solution for the software component of their ecosystem. Oh, it's an open source, but like it's anyone you talk to who knows who's engineering machine learning knows it is tiers below what CUDA is, tiers below. So you're not going to leave NVIDIA's ecosystem to go into AMD's because they have a slightly cheaper hardware component. No.
So
like
let me
I
ask
think
you this then. Knowing that, right? When you have the choice to, let's just run a scenario with the average investor, right? Let's say I have $2,000 out of my 10 grand portfolio that I wanted to put towards a software name that's going to capture appreciation. And I have NVIDIA sitting here and AMD sitting here. I mean, to me, it's a clear and easy choice. How do you feel?
I think it's NVIDIA, clearly. I think momentum score it's a no-brainer. I think momentum score is a lot. Like, look, let's see the momentum score for everyone. Like, look at this. Top 3. There's a reason the top 3 momentum scores on Value Sense right now. TSM, Broadcom, NVIDIA, and ARM. These 4 have massive moats. They have massive defensible moats. They are the names that they're. Oh my God, my screen is overheated.
So basically, what he's saying here is that if the opportunity to get a better name is available, why would we mess around with a riskier choice that just doesn't have the same traction, moat, or momentum that any of these other names do that will still get you the exposure? Because that's all this is. You have a big pile of money and you're saying, I want some exposure to this. I want some exposure to this. I want some exposure to this. Risk manage returns, number 1. This is part of risk managing the returns. Find the outperformer. And if you want chip exposure, semiconductor exposure, buy the best name. Not an okay one because it's lagged behind. It's lagged behind for a reason.
So going off what you just said right there, top 4 clear. They all have defensible moats. We already know Taiwan. They're the reason AI exists. Essentially, without Taiwan, AI would not exist, guys. Broadcom, I just said, inference is about to explode. The networking component within the AI infrastructure for hardware, that's what Broadcom's bread and butter is. They're going to benefit off that. NVIDIA, we already got into it. They have a pricey ecosystem nobody can touch. ARM, They're the invisible blueprint behind the new digital economy that a lot of people aren't aware that it's using ARM's blueprint for all the
Yep.
chips on all these new products.
Yeah.
Now you skip the level. They all have a narrative issue. Intel, I don't need to get into Intel, guys. The reason it's a higher score is because of the buyout bid momentum. I can
Yep.
promise you that. Micron, memory is a commodity. I really, it doesn't matter how great of a partnerships they have. It doesn't matter how undervalued they look, because they are undervalued, guys. Like, they really are. But if your product is a commodity, like, you're always going to be priced undervalued because there is no
Yep.
competitive advantage potentially. AMD, same category as these two, where hardware company, you can't just be a hardware company anymore. This is where the opportunity looks in my eyes, though, right now. I'm seeing the lowest momentum score in this group, ASML. And I think ASML is one of those big three names that you need for AI. You just do. And the lithography machine is just, it's so vital for AI to continue. But the issue is it's pricey. There's China exposure. But you see this, like, the probability and growth, it's nines. Their momentum is low. But I know they have a moat. So usually this combination right here screams great long-term buy. I really think so. And the reason it's just like underperforming is I really think it's the China exposure. But look at these margins. Like, they're growing a 5-year CAGR, 19% top line. Really impressive. They're doing that while having 32% free cash flow margins, 27% net income margins. So I really do believe, like, ASML, if you're a 5+ year
stock has
investor,
only ever gone up. Period. I just looked from 1996.
Yeah, it's just one of those steady grinders that are going through that weak cyclical period. But if you hold long enough, like, I think it's a great opportunity. Opportunity cost might be an issue here with this name, but they deliver in their earnings too. Look, 9 of the last 10 earnings beats. 1 was a miss. 90% success rate. So, like, I just think it's, let me see how much R&D. 15% of their revenue is R&D. So that's interesting. Let's see if that's ticked up over the years. It has. So they're reinvesting. It has big time. Look, 11 to 14 to 15. So they're looking for the next latest and greatest thing, which is great to see. Here's what AMD's R&D is, because I hope they're doing something for their software offerings.
Yeah, they really need to be. Do you want to find that and then move on? I want to, because I know everyone's wondering about Palantir. That's definitely one to discuss, and then we'll get into a little smash or pass so that you guys can put your tickers. So start dropping them in the chat right now, and we will hit them on the speed run. We're gonna transition. You want to pull Palantir up there on Value Sense?
Yeah. So AMD has gone from 17 to 25% of the revenue. So that is actually a big one. They are reinvesting in the R&D. I don't think Palantir offers that. It's not spending that much in R&D because they have the best product out there.
Yeah,
just do. Like, I wouldn't be surprised.
They are the R&D.
18%. That's still a decent amount, but yeah, I mean, look at that moats. Usually, when you have a high score like this, an 8.4, 8.5 and above momentum score, this is a good pre-read on if a company has a moat or not, especially when the markets pull back the past month. So if you guys don't want to do the hours of research like I do, like, this is somewhat of a good pre-read, and then you can do the research after that. But yeah, I mean,
just come to the stream. That's all you need to do. Simple as that.
Yeah, that's true. It's very true. All right. So what's the next ticker? Should we do? Is there more?
I was gonna say we do Palantir. I'd say we wrap it up with a quick 5. Let's do HIMS. That's the one was suggested. Thank you, Carl. Carl. Oh no, Carl. Oh no.
Wow, look at that. Maybe I am wrong
surprising.
on HIMS. That's a 9.9. That's a lot of momentum.
So question, like, who really targets this? I mean, it's not small telemedicine. Is it Amazon? Like, I struggle to understand their business.
Oh, I mean, it's compounding drugs, but it's also their whole spiel is.
So is that the arbitrage? Is the compounding factor?
It's for the GLP-1. That's the arbitrage. But the other one's also convenience. It's also like not having to go in person to the doctor's office. It's boner pills. It's hair pills. Like, people don't want to be seen in person. But it's like embarrassing, maybe perception wise. So the issue, though, like, again, like, everyone here knows, like, I am a long-term HIMS bear because I just see convenience and pricing is the two pillars in telehealth, because telehealth is a commodity. It really is. Just look at Teladoc 5 years ago. So like if Amazon Prime is getting to the space, which again, they've highlighted they are, everyone and their mother has Prime membership. Everyone. So I have a feeling they're going to underprice everything on the Hims platform. And that's going to be 50% of the pillars. The other one's convenience. Again, free. It's going to be, nobody has a logistics network like Amazon does. Nobody. FedEx and UPS wave the white flag, conceding to Amazon's logistics network. So this could be a situation where, again, Spotify versus Apple Music, Spotify won. Netflix versus all the other streaming wars, Netflix won. This could be where Hims does win out. And I'm reading into something that just isn't there. That 100% could be the case. Really could be. But there's so many stocks out there that if I believe in that, why should I participate? Like I'll just move on. Like maybe it's in the bucket where it's not my lane and I'm wrong. Because clearly, look at this. Wow, they are up substantially this year.
Yeah. My thing is just if again, most Americans here are talking about maybe 5 to 10 grand in a portfolio. They're going to be, investing on their own in names like this. And I would struggle to find reasoning to choose, even this over the Qs, right? Or this over the SPY. Because I just think the risk is there, but I don't know. I don't understand the offering, I guess. Like I don't get the moat. It just seems like telehealth plus. Because I understand the compounding element. That's good arbitrage. Like you own production and distribution. Great. But what do you have? You're a data business that owns a database of customers. That's really the only value here when it's all said and done.
Yeah, I mean, I just think these gross margins of 77% is going to go to like 65% potentially once Amazon really matures. And that's a big difference. Yeah.
I have to be cheaper than you or easier than you. It's one of the two. I don't get to tell you, fuck you, this is what it costs. And I don't think any business like Palantir, you know what they say? If someone came with an issue, this is what they tell them. Fuck you. Here's what it costs. And you need it. So what are you going to do? Yeah, let's wrap up with Nike because I just checked that chart and my God, I did not know Nike. Yeah, it's bad, dude. It's really bad.
The momentum score has got to be like in the gutters, 2.3.
And you know what? I don't even think that it's a Nike problem. I think it's a market share problem. If you look at the advent of all these like new and upcoming brands and their ability to use your Shopifys of the world to scale, I don't think it's that people like Nike less or they want less Nike. I think it's that instead of buying 75% of their clothes are Nike, I think only 40% are because they're experimenting with these other small brands that creators come up with, right? Like the Young LA shit. Like the arbitrage, like it's gone. Like these Chinese firms are now white labeling production of pretty high end clothing. Like, dude, you can get some pretty good providers now that put together some quality clothing that's custom branded for you. And if you have a big enough audience that wants the brand, it's done. So I think it's just Nike's problem is just that market is never going to be dominated again like it had been.
I mean, just look at the momentum. Like this is the competitors in that space. Like they're not doing that bad, guys. Like Crocs is still doing pretty bad. But like look at
wild story, dude.
Look at Deckers. Deckers is doing well right now, according to like the momentum score. Like this is just in the gutters. But just look at their it's going to take a while for Nike to turn around. I think people anticipate it to be quick. New like marketing tactic. Bill Ackman's going to put pressure on the board. It's not going to be as quickly as people think. Like even right now, the intrinsic value is overvalued by 37% right now on the score over here. And it's just,
dude, they get the brand king value. They get the brand king premium. But again, that's the thing is like, maybe there isn't one as much anymore. Everything is fractionalized, dude. Everything's breaking off into these tiny little worlds. So if you can find a business solution that fits in every single one of these little microcosms, your company is going to be a multi-billion-dollar company. I'm telling you, in 10 years, we will have billion-dollar solopreneurs. It will happen. And it's going to be so weird. It's going to be so weird.
No, you're absolutely right. So I mean,
all right. We love you guys. Had to get it in quick, but honestly, I love it. I feel like we get right into the shit. There's no bullshitting around. We get right into it and get it done. you for swing options targeting 25 and 22 strikes. I'm still long Unity, courtesy of Mr. Shy here. That was a great call out.
I'm
What
telling
got
you, this
flamed?
summer people are going to talk about Unity, and this is going to be the next hot stock. You're already seeing it right now on FinTwit. I was here telling you
Dude,
first. Vector
Twitter,
will
dude.
change the game for Unity.
We got roasted on Twitter for reposting it, and now they're all like, "Yo, dude, where's the next one? Unbelievable!" So, not wrong. All right, we love y'all. Stay blessed now. Bye bye.